Hello traders and welcome to another video review. Today is Wednesday, March 2nd, 2022. Let's take a look at the Forex calendar for today. The gross domestic product data from Australia has beat the expectations of 3% with the actual reading of 3.4%. This reading for the fourth quarter is way better than the minus 1.9% last reading. So definitely we will take a look at the Australian dollar today, and that was the key event during the ASEAN session. During the London session, however, we have plenty of data scheduled for release, including the nationwide house price index. As you can see, in the UK, house prices are growing 1.7%, beats the expectations of 0.6%. Government budget balance data from France scheduled for release Q8. We got the unemployment change from Spain, and of course, unemployment change and unemployment rate from the most important economy for the European Union, which is of course Germany. 5 to 10, this is the scheduled time for the unemployment rate and unemployment change from Germany. Consumer price index and core consumer price index data from the Eurozone are scheduled for release at 11 o'clock. Please notice that the consumer price index should increase from 5.1% to 5.4%. The same situation with the consumer price core, 2.3% to 2.5%. 11:30, we got 10-year bond auction from Germany. And during the New York session, we got the key event of today, Bank of Canada overnight rate and the rate statement. This event is scheduled for release at 4 o'clock, and the market participants expect the Bank of Canada to increase or to hike the interest rate from 0.25 to 0.50%. Moreover, during this day, we got the ADP non-farm employment change and scheduled for this Q2, and we got some speeches from the FOMC members. First, James Bullard, 3:30, and then Federal Reserve Chairman Jerome Powell will give a speech at 4 o'clock. Crude oil inventories, 4:30, of course, and then at 8 o'clock we have the Beige book. At the end of the day, we got the speeches from the MPC members Silviana Tenreiro and the Bank of England Deputy Governor John Cunliffe. So that's about everything for today. I think we should start with the Canadian dollar and then of course with the Australian dollar, because it looks like those two pairs will be heavily traded today. US dollar versus the Canadian dollar daily time frame chart is showing us the pair that has been trapped for one whole month inside of this narrow consolidation. After the initial drop from the level of 1.2962 towards 1.2450, we have the first wave of the bounce and then consolidation between 1.2647 and 1.2812. Occasionally, both tried to rally, but the next day all of the rally had been fade out, and the high, despite the fact that the high was at 1.2876, the daily time frame candle didn't close above 1.28 and 12. Then we push it back, and then of course we are still, therefore we are still trading inside of this trading range. Bank of Canada interest rate decision scheduled for this at 4 p.m. We are expecting the Bank of Canada to hike the interest rate from 0.25 to 0.50. However, that situation would mean that the US dollar will be sold and Canadian dollar will be bought. So basically, we should expect a down move on the US dollar to the Canadian dollar on the daily time frame chart, targeting 1.2647. First target. This is the range technical support. Then we have the technical support at 1.2609 and 1.2570. So please keep an eye on the levels here. For now, of course, there is no momentum. There's almost nothing going on the market, because market participants await the interest rate decision of the Bank of Canada. In case of a surprise, if there is no hike, we will most likely stay inside the range, because There are at least 4 hikes expected from the Fed this day. The one will start in March. The first one will start in March. So that's the point of view of the Canadian dollar, range bounded, waiting for the Bank of Canada interest rate decision. Let's take a look at the Australian dollar. The Australian dollar, as you can see, is trying to get back to the channel that has been of course trading out of this channel. Recent high, just a marginal high made at 7,291 pips, marginal because the other one was 7,285 pips, so this is only like 7 pips higher. Nevertheless, this one looks to me like a shooting star, a candlestick formation. So this is a daily time frame chart. Remember, any kind of a candlestick formation, price pattern, or Fibonacci relationship is very, very important for the traders on this time frame chart. So this is our current situation. We are bouncing from 7,252 technical support. Market is locked right now. High was made at 7,284. However, we can see upper shadow here, upper shadow here, upper shadow here. Bears are active in this zone. Moreover, they were active in this zone before, and even towards the level of 7,317. This recent high was, of course, made in the middle of the January. However, the bears pushed the prices very, very strongly to the downside, and this is our technical resistance number 1. This is the key technical resistance. So if the bulls will fail to rally here, we will likely go lower towards 7,200 and 7,141. So please, again, keep an eye on this situation here. It doesn't look like the bulls wants to go back to the channel right now, because they are having problems with the momentum here. Momentum is only 58 points. It's not that strong. So please keep an eye on the current situation. It might deteriorate very, very quickly. So Australian dollar to the American dollar, we should take a look definitely on the crude oil chart ahead of the data. So what do we have here? We have a classical extension in the wave 5. This is still wave 5, extending towards the new highs, the highs that were made just recently. Today is 111.26. The market is still going up. All of the targets for the wave 5 had been completed. As you can see here, our Fibonacci relationships has proven to be correct. Right now, we are seeing another possible targets for the wave 5, and the next target would be around the excuse me, this is going here, would be around the level of, there you go, here around the level of 113.91. so not that far away, only $2 and a half. So this is wave 5. As you can see, we are still counting our waves, because this situation here is clearly an impulsive one. But please notice the fact that this is, of course, the end, the possible end of the up move for the in this cycle for the crude oil. So right now 95.60, 95.89 are the technical supports, and the crude oil is on the higher level in 2014, but I got my zone here, 108.06, 112.15, and this zone, I'm trying to show you where this zone came from. Okay, let me just zoom out, and zoom out, because as I said, 2014 is the year we've seen crude oil above the $110. This is my zone. The highs from 2012, 2013, 2014, 14. Of course, this is the zone. This is the key zone for the crude oil. As you can see, I don't even have enough data to provide. No, I have. Okay, 2011. I just cannot zoom out a little bit more. I think I will add one more line here from the highs of 2000 and this is 2011. So let me just see what is going on around the level of 115. Let's just put 115 full level here. There you go. This is the zone. This is the zone where the market's always been pushed down. 2011, 2012, 2013, 2014. So shall we expect the same situation during this recent rally of the crude oil? As you can see here, we got our crude oil Elliott wave count. According to our count, this is the wave 5, and the Fibonacci 127% projection is at 113.91. Maybe there will be some extension towards the long-term technical resistance, multi-year technical resistance at 115. However, we cannot say anything about any reversal, as the market didn't print any kind of a reversal candle yet. We have a big breakout to the upside. This candle is has low at 95.31 and high at 106. $10, almost $10 in one day. But the market levels are now extremely market conditions are now extremely of about 81 points. So I think somewhere the crude oil might start to either consolidate, or it will do some sort of the pullback to the downside, or there will be a full reversal on the crude oil chart. However, if I'm wrong and then there is no reversal here, that means we should see crude oil much higher than the level of 115. We should go at 150, 60, $70 per barrel. So please keep an eye on this zone. It's the key multi-year technical resistance zones for the crude oil. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.